The next big important factor for evaluating multifamily is the capitalization rate, or the cap rate. And the cap rate is a measure, it measures the relative return of the NOI. So what is the NOI yield on the purchase for the purchase price? Okay, so we're going to be able to use these three things. So once you have any of these three items, if you have two of them, you know the other one. So if you know the NOI and you know the cap rate, you know the value of the building. What would be a good offer price? In other words, it could be the purchase price or the offer price. If you know the purchase price and the NOI, then you know the cap rate, et cetera, et cetera. So these three have a relationship that's extremely strong and interchangeable, and they're very key in understanding deal analysis for multifamily.
One of the most popular tools investors use to determine price and value is the capitalization rate, or commonly referred to as cap rate. In short, the cap rate is the relationship between the annual net operating income, NOI, a property produces, and the price of the property. Let's quickly talk about NOI. The NOI is the income remaining after all taxes, insurance, and operating expenses are paid. Example, a property owner collects all the rents each month and then pays taxes, insurance, and expenses associated with owning the property. The income remaining is the NOI for that month. To determine the cap rate, you use the annual NOI. Now, for example, if the annual NOI of a property is $60,000 and the price of the property is $1 million, the math would look like this. The annual net operating income of $60,000 divided by the $1 million price of the property equals a cap rate of 0.06, so cap rate is 6%. The cap rate can be a personal decision for investors, as it represents their belief of the risk of owning the property. Using the example above, except now we'll use a 7% cap rate. How much will an investor pay? Approximately $857,000. How do we get this? Take the NOI of $60,000 divided by a cap rate of 0.07 and it equals $857,142, rounded to $857,000. Remember, lower cap rate, higher price. Higher cap rate, lower price.
Another factor affecting the cap rate is the liquidity in the financial markets. So as we're all aware, the overall cap rates are going down. So cap rates are compressing. What's happening is we have a lot of liquidity coming into the financial markets. So we have this rising market where all this money is coming in and it's looking for places to land, to invest. And by placement of all that money, it is lowering the cap rates all around the nation. We also have a factor called the tax codes. When we have favorable tax codes that are creating tax shelters, such as exist in real estate, that creates a higher demand for those tax shelters, and that additionally will lower the cap rate. And then our last one is appreciation, and that's when the real estate prices, when the mentality of a real estate investor says that it's going to go up. It's been going up forever. It's going to keep going up. They kind of get that mindset of relying on the appreciation of the past, and they are willing to pay a lower cap rate because they believe it will continue to appreciate. That, however, is not what we do as value add investors. We purchase buildings that have the ability for us to force appreciation, and thus we are able to, we're not relying on appreciation, we're forcing appreciation. We'll talk a little bit more about that. The Holy Trinity was coined by Dave Lindahl. He's the author of several books, including The Multifamily Millionaire and Emerging Markets, I think is the name of the other one. He came up with this term. And so what it is, it's the first make or break filters for a deal. Property management companies. So this is another set of people that you can kind of play against each other. When you're interested in a property or a certain metro, you can call the property management companies and tell them, you can say, hey, I'm thinking of buying in Tucson. We'll just use that as an example. Can you tell me what are the rules of thumb? We're going to talk about the rules of thumb in a minute. And what do people typically pay for repairs and maintenance? We are now going to talk about rent rolls. So sometimes you get a rent roll and it's in a PDF form and you'll want to convert it into Excel. The rent roll is going to show you, again, we talked about it before, it's the actual average rents and the unit types We're going to talk about loss to lease. It's going to show you how long have tenants been at the property, what are the proven rents that are on record, so what are they actually paying, not just what the broker's talking about, and more.